What's up YouTube, Dougie Chong here. Welcome to today's video where I'll be reviewing McDonald's stock. So in this video, I'm going to go over my personal experience with McDonald's restaurants. Then I'll go over some of the business model, I'll look at some of the numbers, and then I'll say whether it's a buy or not in my opinion. For those of you that don't know, McDonald's is a fast food restaurant chain that was founded on April 15th, 1955 in San Bernardino, California. I personally enjoy eating McDonald's every now and then as a sort of guilty pleasure. I know it's not the most healthy food for you, but I very much enjoy their signature crispy French fries. A lot of people I know are on polar opposite sides of McDonald's. They either will never eat it, say they'll never eat such low quality, unhealthy food, or they swear by it and eat it almost every single day. There's even a documentary on McDonald's food called Super Size Me, where a man tries to eat nothing but McDonald's food for 30 days straight. Regardless of if you like or hate the restaurant, there's no denying that McDonald's is one of the best fast food chains in the world, if not the best one, period. They are found in 120 different countries across the world and serve about 68 million customers every single day. McDonald's has close to 38,000 different restaurant chains and employs about 210,000 people worldwide as of 2018. What makes McDonald's different from a lot of other restaurant chains is that they actually own the land that their franchises are on. They don't just rent or lease the space. This makes them almost a play on the real estate industry as opposed to the restaurant space. And McDonald's has one of the most expensive franchise fees. It seems to cost somewhere between $1.3 million to $2.3 million just to start a franchise. For that kind of money, you could just buy your own small property and run your own restaurant. So that just goes to show how important the big brand of McDonald's is and the near guaranteed income that comes with the franchise. From then on, McDonald's takes 4% of gross sales, and it's these franchise fees plus rent that makes up the majority of McDonald's income. One of the things I've noticed about McDonald's is that they are pushing to use technology to make their restaurants more efficient. This is a signature aspect of McDonald's. Most people take for granted how fast their food is prepared, but McDonald's really spends a lot of time innovating their food preparation techniques. They also have one of the most efficient supply chains and hence are able to offer some of the lowest prices. These are two signature aspects of the McDonald's brand, not necessarily taste and healthiness, but quickness and low cost. I do find that the food preparation time is typically a bit faster than other chains such as Burger King or Wendy's, but this comes with a caveat because if you go near meal times, the waiting time in the line will sometimes be longer than the food preparation time. But again, a new technological advancement that they are using in their restaurants is the use of kiosks to place your orders. I think this is the future of the fast food industry. They'll always probably need 1 or 2 cashiers for people that are unable to use the kiosks, but most people are just able to order the food from those touchscreen kiosks. I have seen other restaurants use these kiosks as well, but I think McDonald's was one of the first, and I think it's a critical step to reduce the cost in the future. The cost of labor is unfortunately always increasing, and the only way to get rid of it is to automate the process. The other technical advancement that I've seen recently is that they were recently pushing their new mobile app. I've used it in the past and I think it's pretty slow and buggy right now, but it is a step in the right direction. They even had a promo here in Toronto where if the Toronto Raptors scored 12 or more 3-pointers, you would get free fries the next day. I think this promo actually went better than McDonald's expected, and they got more customers and more orders than they could handle on their servers. A final note on the business model of McDonald's is that they updated the decor of all the restaurants to have a darker color theme. If you don't remember, their old color theme was kind of that red McDonald's roof, and I think this darker look is important for competing against more modern franchises. Alright, now let's look at some of the numbers. Currently, the stock trades at $179.74. This is about $50 lower than the 52-week high and about $50 higher than the 52-week low. Zooming out to the 1-year price chart, not much growth can be seen at all, and the stock graph looks actually pretty stagnant. However, the 5-year chart shows consistent growth, which suggests that maybe sometime soon it'll continue that upwards trajectory. The PE ratio sits at 23, which is very good, and the market cap is $133 billion, which makes it the biggest company by market cap in the restaurant space. It's like a good $20 or $30 billion clear of the second place, Starbucks. Alright, now let's take a look at the balance sheet. And before we look at it, I'm gonna say I expect it to be amazing because McDonald's is the king of the restaurant space. So McDonald's has $47 billion in assets, but a whopping $55 billion in liabilities. I expected the balance sheet to be better, and that sudden balloon of liabilities from about 30-something billion to $55 billion from 2018 to 2019 is a bit concerning. So in my opinion, I do not think that McDonald's is quite a buy yet. That being said, I will be watching this stock very closely, and if it falls to that $170 region, I will look to start a position. And of course, with a brand as big and established as McDonald's, there is very little risk to this company. That being said, there was very little upside because there is very little risk. They can improve their efficiency and move to a few other markets, but other than that, they cannot grow all that much because they have already expanded all across the world. I will end the video by mentioning that I did buy some shares of AMD stock this past week at about $51.60. I managed to get 20 shares and now it's trading a little under $50. If it continues to go down a bit more, I will consider buying more shares, but I'm getting excited about the market again as it comes down to more reasonable levels. Overall, the market is still a bit high in my opinion, but it's starting to come down and I'm excited that I can start some new positions. That's it for this video, guys. Hope you learned a lot about McDonald's stock. As always, leave a like if this video helped you at all, and don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.